Hey Tone, how are you?
I'm good. I'm good. How are you guys?
We are good. Tone, could you just tweet it out from your account as well regarding the space?
Should I retweet the current one or should I
Yeah,
make a
just
new one?
retweet the current one or just put in a comment. We are live and hopefully your shadow ban has been lifted for good now and people can see that you are here then.
All right. Welcome, everyone. I see Brian. I see Bitcoin Rick. Seen you here before, pretty sure. Brian, hope you're doing well, man.
All right. So Tone, people are flowing in. Let's start off. So guys, welcome to our weekly spaces. A lot has happened in the market from the last week when we talked. Major news came through. Markets crashed like anything. And yeah, I mean, there was a lot of blood in the market. Tone, I want to start off by, well, before I start off, sorry, Tone, let me introduce the Financial Summit. So, Financial Summit is basically a yearly event, guys. The next one's going to be in Maldives in 2025 March. And if you haven't booked your tickets, do visit our website and book your tickets for the event. It's a 5-day event. You're going to meet a lot of people from different parts of the world, different fields of work and even study at times. Nutritionists to breathing teachers to traders, hedge fund managers to VCs, a lot of different people are from different areas. And then on top of it, you have Tone over there, who's going to be obviously giving his talks. But then you'll have other people giving their talks and teaching stuff in regards of how they trade, how they see things, what are they looking for in the future of the monetary policy or future of the markets as it is. So yeah, guys, if you haven't, please book your tickets and we would love to see you there. Starting off, Tone, let's start off with BTC, Tone. Let's start off with the crypto market as a whole. To be honest, we could start off anywhere. We could just put, flip a coin and or even throw a stone somewhere and we can start off on that stock. Markets were not looking good. Markets are not looking good, Tone. What are you seeing? What are you looking at this point of time for BTC?
No, markets are actually not looking good. However, the weekly candle still looks like a reversal candle coming off a $49,000 low over the weekend. The daily candle is on an MRI buy, even though the real bounce took place, over 24 hours ago. So right now we're pulling back down. We were above 57,000 late last night, earlier today. We're now down to 55,000. I think between the big bounce that has already taken place, remember it was an $8,000 bounce off of 49K to 57K. We're now down 3,000. As long as we are closing this week above 56,000, I think this is still a massive reversal in the making. Today is Wednesday. We will, know more by Friday, even though the weekly candle is not going to close till Sunday. Right now, I don't see this. Let me just say, at the moment, I still think the low is in. But if we continue to pull back down into the weekend and the price is now approaching 53,000, 52,000, lower lows are very, very possible. We're in a bit of a tough situation now. I didn't really expect to see a scenario like this where the ETFs are contributing to massive selling until after the bull run has ended. But expect a lot more volatility when there's demand for Bitcoin. The ETFs will drive the price quite high. But when there is when there is blood in the streets and there's selling going on, the ETFs are going to flood the market with more Bitcoin selling. This was completely expected. Me and many others expected the bullish cycle to kind of start moving around now. We were looking good. The whole big interest rate increase in Japan screwed up the Japanese carry trade, which I personally never really cared about. I always thought that people that think they have easy money, they're something like this is going to blow up on them eventually. I think the big crash in the markets is also I'm leaning towards it's over. Even the big crash in the Japanese markets, I'm also leaning towards the fact that it's over. I know everyone is comparing the current crash to the 1987 crash. I don't think this was anything like the 1987 crash. People don't realize, multiple people were committing suicide that day. It was not. It was a lot worse than this. I mean, maybe in Japan it was a little bit similar to the 1987 crash, but anywhere else in the world other than Japan, this is not like the 1987 crash. If the markets crashed at least double what they did, maybe triple what they did, then we can start comparing this to the 1987 crash. COVID was a bigger crash. Right now, this to me looks a little bit more like March of last year when we rallied from 15,000 to 25,000, then crashed to 20,000 and made the most beautiful daily reversal candle I've ever seen on Bitcoin. We don't quite have as pretty of a candle, and we don't quite have it go to a perfect moving average like what happened back in March or April of 2023. But if this week can close at 57 or higher, I think the worst is really, really behind us.
But Tone, like I agree to certain points, but as a long-term trend trader, we have lost the 200-day moving average. And we haven't just lost it, we lost it with some force, right? 200-day moving average for any classical trader is basically the trend decider. Now, if we look at it from that perspective, are we in for a short period of bear cycle-ish price action and then switching into another the next bull run, maybe later this year sometime, but 3-4 months of bearish price action, and then kind of turning it over? Or do you think it's going to be like a V-shaped recovery that we had during COVID, where we basically went down, clear in liquidations, and that's it? There was a clean reversal after that.
I think that is the more likely scenario because we are now 6 months past the halving. No, sorry, not 6. It was in April. So we are 3 months past the halving. So another 3 months, I mean, sure, can we see a bit of a bear market for 3 more months or consolidated market for 3 more months? Yeah, absolutely possible. But sometime this year, I'm absolutely expecting a bull market. I mean, the miners are not mining that much more Bitcoin. So any kind of significant demand and the market ticks up. I'm still not sure what the hell is happening with the Mt. Gox coins. I'm actually not sure what's happening with what everyone refers to as Mr. 100. I have no idea what government actor that is, but that's a big Bitcoin purchase. And GBTC selling is winding down. They converted 27,000 Bitcoin into their new ETF. That ETF has the lowest fee out of all the ETFs. I mean, personally, I would rather give my money to BlackRock than Grayscale at this point. I think Grayscale has proven that they're a bad actor in the Bitcoin space. BlackRock has not yet proven that they are a bad actor. And BlackRock ETF is by far the most dominant ETF. It's going to be more dominant than all the rest combined, probably by this time next year. This new Grayscale ETF actually has a lower fee than BlackRock, but no one wants to put money into Grayscale because they've proven themselves to be a bad actor. And I think Grayscale is not going to deleverage as much and as fast as it did before. And once we start ticking up, I think we can still wake up one day. Once the price of Bitcoin eventually breaks 70 one more time, we can wake up to a $10,000 candle overnight. I can certainly see that happening. I think we're in this. We're in a big consolidation process. Yes, this was a fall to 49. but we were at 53 not that long ago. There's not that much difference between the two. We're technically still consolidating. We're making continuously lower highs and lower lows. It's been happening for the last 3 to 4 months since like March or April. And I am expecting the cycle to break this year.
100%. Tone, on top of that, Bitcoin has still not made a new all-time high against Nasdaq. We are still basically a bit below the all-time high that we had in 2021 against Nasdaq. Nasdaq has shown strength, but there is a massive. So if you look at the chart, the ratio chart for Nasdaq to BTC, there's a lovely inverse head and shoulder being made. I'll just put it in your view as well. 1 second, Tone. Where did it go? I just had it on. So basically, it's a beautiful inverse head and shoulder that is being formed on the pair. So I am expecting crypto market overall to start running much more faster compared to stock market. And on top of that, in your basically prediction of a correction in the stock market, hats off to the dot point. We did basically did a little bit further than what you anticipated of 10%, but it was, you said 10 to 12%, and that there we are. We are exactly there. 10 to 12% correction. We are looking good. We are sitting at closer to 200-day moving average. From the perspective of stock market, Tone, are you seeing much more downside, or do you think that's it? We are done. You're muted, Tone.
Oh, sorry. I'm not seeing a lot more downside. I think the stock market is going to reverse. Okay, let's take a look at Japan, for example. Everyone is everyone is concerned that the traders had to sell their stocks because they had to cover their loans, and that whole, again, just Google the Japanese carry trade on what's going on there. I continue to sound like a broken record. The problem is government debt and the sovereign debt crisis. Interest rates will stay high no matter what. Even if the Fed has an emergency 75 basis point rate cut, interest rates are still high. In fact, if the Fed does have an emergency 75 basis point rate hike, it creates additional problems. Yes, the government is not going to go into bigger debt because they can now sell their bonds cheaper. They owe people less money when they sell their bonds. But nobody wants to buy government bonds. There is still a massive rotation that's going to happen out of government bonds and into the speculative stocks. All these people in Japan raised their interest rates. Who wants to buy Japanese government bonds that are now at a 1% interest rate where before it was 0? What is the big difference? But the Japanese debt to GDP ratio continues to rise. Why does anyone want to own a Japanese bond, even at a 3 or a 4% interest rate? It's going to default and you will get nothing. It is better to just buy into the Japanese stock market at a discount because they still make things like nice cars, even though China is going to absolutely crush them. And I have a friend that just came back from China giving me the underground scoop and what's happening there. And so now every time someone comes back from China and tells you what they saw there, I become a little bit more of an expert on China, even though I am very far from a China expert. So at the end of the day, the stock market is going significantly higher because no one wants to hold government bonds. And remember what I said last time. Last time we did the space was right before the interest rate, the FOMC. And I said there is still a chance that the Federal Reserve will lower the rate on July 31st. But the only way it would happen is if the stock market crashes on July 30th or the 29th. It did not crash on 30th or on the 29th or 30th. It crashed like 3 days later. So guess what? As much as the Fed will say they don't care about what the stock market does, they absolutely do. So I was confident the Fed was going to lower the rate in September. Now I am 90% confident the Fed is going to lower the rate in September, unless the stock market goes to a new high before middle of September's rate hike. Okay? And if the stock market crashes, again, the Fed will emergency rate cut. And I still don't understand how the Fed can sit there and claim that they don't care what the stock market does. They literally will have an emergency rate cut because the stock market crashed. They should just admit that they watched the stock market, because there's nothing wrong with the Fed cutting rates because the stock market crashes. When the stock market crashes, the economy crashes.
Exactly. It's a data point. Stock market is a data point. Like they say, we look at the data, it's a data point, and I don't know why they don't just accept it. I agree with you.
Right. So we are expecting a rate hike in September, and it doesn't matter. Again, it will not matter. Right now, the rate is 5%. You can borrow money based on a 5% rate, plus or minus whatever, right? If it's a house, it's plus. If it's, I don't know, other stuff, it could be minus. The point is, a 1% difference in the rate cut is irrelevant in the overall economy. It is relevant when you're moving $1 billion. It is not relevant if you're buying a car, okay? It may be relevant if you're buying a $500,000 house, but it's still not affecting the overall economy, right? If you can't afford a $500,000 house at a 6% interest rate, you probably shouldn't be buying it at a 5% interest rate. It should not make that much of a difference in your life, okay? If we're talking 6% versus 3%, now we're talking 6% versus 5 or 4.5, it shouldn't make a difference. At the end of the day, and with every single year, people are less inclined to own fixed income and more inclined to go into the stock market and risky assets, because the debt to GDP ratio is only rising. And the overall high interest rate environment is blowing up the net interest on debt that the government is paying and is constantly rolling over. I can't wait for the year-end numbers on the budget. And also, I have all the numbers of foreign-owned U.S. government debt going back 25 years. The last couple of days, I've been updating that part of the spreadsheet. I can't wait to see the numbers in this December, because over the last 3 to 4 years, there's been massive shifts in foreign-owned debt of U.S. government. There are some crazy things you can see in that data. The two made-up countries of Liechtenstein and Belgium and Liechtenstein, 15 years ago, owned almost no U.S. government debt. Today, they own almost half as much as China does. Can someone explain to me how two useless made-up countries with no population own half as much U.S. government debt as China and its billion-plus people? It is insane. By the end of this year, these two countries will own $400 billion in U.S. debt. That is completely insane. This is what's keeping America afloat. It's literally the country of Liechtenstein, which nobody can find on a map.
Hey, Zach, how are you doing?
I'm sorry. I'm saying Liechtenstein. I meant Luxembourg, which is equally identical, and no one can find on a map.
I was confused as well. Trust me, I was like, maybe there's a country I don't know about. Go on, Zach.
No, Liechtenstein. No. That's it is a. I get these cities and countries confused because no one ever talks about them. No one even visits them. It's like the size of Monaco, for fuck's sake, only not run by a capitalist.
Well, let's bring in Zach now. Hey, Zach, how are you doing, man?
Doing well. How are you?
I'm good. I'm good. Any opinions on things that we have talked about yet till now?
I just joined, so I hadn't heard much of what
Oh,
you
okay.
said.
We were just discussing. We started off with Bitcoin, so for sure, your opinion on Bitcoin price action, the massive, dump that we saw over the past week, over this week, to be honest. Market open on Monday, and what are you expecting?
Yeah, I mean, so it seems like, at least as of now, the dump that we saw was just technical, right? It was just an unwind of the yen carry trade. That probably had some direct impact on Japanese folks who are holding Bitcoin. It then definitely had some indirect impact on the sort of like VIX spike and risk unwind. And maybe that's all. Or, like we'll see, maybe this is a sign that we're closer to a recession and a hard landing that people had thought. And probably if we have a recession, Bitcoin goes down until there's liquidity injected into the system. I think we're just kind of in a holding pattern there. Like, I think we were on a pretty bullish trajectory beforehand. Like, fundamentally, this is about the sort of best Bitcoin has ever been. We've got spot ETFs. We've got, definitely the Republican Party, but also to some extent the Democratic Party signaling that there will be a pro Bitcoin shift to policy. We've got Morgan Stanley's salespeople being authorized to start hawking Bitcoin to their private clients. So, like, fundamentally things are good, but we're still at sort of the mercy of the macro environment. And so, I think that's going to determine the fate of Bitcoin over the coming months.
No, 100%. It's consolidation. Like, people get scared because they see a dump on one day. If you just zoom out, guys, you will see it's just a consolidation. We basically grabbed all the liquidity from down the lows, and then we ended up in the exact consolidation. And also, like, people who are new to trading are listening to us, hopefully not many. If you see days like what we saw on Monday, try to go to line charts and just see what really happened on line charts. Where did the market close? And that's where you will see the real picture. So yeah, remember that. Tone, we have been taught, like, we know that Monday's price action across equity markets was driven by Bank of Japan, the carry trade thing. So first of all, could you, in the smallest period of time, explain to our listeners what this carry trade really is? Now, on top of that, we can dig into it later, but could you explain that?
I have a word explain and nothing after that.
Okay. No, if you can explain, and then I can bring in my second question.
No, explain what? Like you said, explain, and then you cut out.
Sorry. Okay. The carry trade, Japan's carry trade.
Okay. So basically, because the Japanese currency tends to devalue against the US dollar, and
Tone, we lost you. Zach, can you hear?
No.
Yeah.
Oh, fuck me.
Now we can.
I'm happy to give a
hear
very,
you.
very quick explanation if that'd be helpful. Basically, the yen tends to value against the dollar over the long run. Because of that,
Now
Bank of
Zach's
Japan
cutting out for me.
has been doing yield curve control, which keeps interest rates on the yen very low. So it's very cheap to borrow yen. And so what you can do is either borrow in yen or buy assets with that, or borrow in yen and then get dollar yield, which is a great trade, both because you get a higher percentage yield on the dollar because US interest rates are higher, and because the dollar tends to hold strength better than the yen. What happened is the yen got devalued so much that the Bank of Japan had to change their policy. And instead of doing sort of yield curve control and lowering rates, they raised rates to kind of shore up the value of the yen because their imports were getting super expensive and that was affecting the Japanese economy. And so all of the people that were piled into that trade of like borrowing yen to buy assets or borrowing yen to get dollar yield, that became less attractive. And so they had to undo those trades. So you had a bunch of people now having to sell the assets that they were holding from the yen that they borrowed to repay their yen loans, which have gotten more expensive. And so you had a bunch of people selling assets all at the same time that plunged the markets down. And then because you had that sharp move down in the markets, it kind of became reflexive, and VIX, which is sort of a measure of how jittery people are about markets, spiked, and that caused other people to sell assets because they were worried that it would dip forever. But then it stabilized, and people have bought assets, and so we've sort of retraced most of the plunge.
Okay, Tone, the question to you would be, so this all happened, the carry trade happened, we saw a huge reaction, and the straight away Japan paused their rate hikes in an emergency meeting. They basically, what was said is that Uchida and Yellen basically agreed on a new strategy in which they basically kind of they saw the test to the unwind trade, and they were like, okay, this doesn't work. So they were forced into kind of pausing this whole thing. And at 3:35, I think it happened at around 3:30 that on Tuesday morning, where they basically came out and said no more rate hikes. That's it, done. Now, do you think this is a forced hand on Japan by other countries? Like, what are you doing? Like, you'll crash the global economy.
No, only the U.S. The U.S. is the only country that controls Japan. Japan doesn't really need to take a phone call from any other country other than the U.S. It's been this way since the end of World War II. Maybe there was a backside to that document as part of the Japanese surrender, where the United States gets to run their economic policy forever. And the moment someone that is planning to veer from the U.S. controlled policy of Japan tries to get elected, he gets assassinated, like happened about 4 years ago. So no, the only telephone call Japan picks up is the U.S. And just like Germany, if the U.S. wants to blow up a Japanese pipeline for cheap energy, the Japanese will blow it up themselves. It's very unfortunate that too many countries can't grow a pair and dictate their own policies. Well, Orban's trying over in Europe, but they just cut him off from cheap gas from Russia, even though Germany has stated that they wouldn't do that. And then the U.S. called them last week, and they did. U.S. still controls a big part of the world, but we can see this grip completely slipping. It's probably was not going to slip in the EU, but it's slipping in other parts. Africa is becoming independent. Southeast Asia is becoming independent in countries where the U.S. did not get their guy elected, which is what happened in the Philippines, and it's what happened in Taiwan. And but other countries are basically standing up to the U.S. Europe will be last, and Japan will be right there with Europe as well.
Yeah, I mean, it was not just like according to what I saw, US markets, to be honest, like in terms of dollar value, they lost a lot of money. But in terms of percentage points, Taiwan was falling. It was in a free fall, right? Korea was in a free fall. I mean, these markets were so much exposed to that Japanese carry trade because for them also it was cheaper money to borrow and then invest into riskier assets to basically increase your gains. And it's fine to do that, but it's quite visible that this does not work. And Tone, when Zach was talking about some people, do you think these some people are basically major banks, who are able to find ways to get this money, or these some people are your retail traders?
I think it's somewhere in between. I think there was a few retail traders and a few banks. Surprisingly, big banks actually have standardized risk management. This is mostly hedge funds and in-between institutions. And they're gonna, fuck around, find out. They're gonna learn their lesson. And in a trade like this, it doesn't require a global bailout. Those that took on this trade will just go bankrupt. It's not gonna lead to any kind of systemic problem in the global economy. It's just, people that were profiting are no longer profiting. Okay. What will lead to a complete and utter disaster is the inevitable southern debt crisis. And I don't think it's going to happen in Japan because people in Japan will continue to work hard, even if they're not, sucking on the government's tit for money. In the United States and in Europe, on the other hand, that is not the case. Okay. If the government check bounces to the Europeans and to the Americans and to the Canadians, there's going to be massive revolution happening all over the streets, and there's nothing their military will be able to do to stop it. That's not the case in Japan. In Japan, if the government check bounces, people will, still grow vegetables in their little garden. They'll still hustle. They'll still be honorable. So I'm not expecting any kind of massive civil unrest or revolution in Japan. Okay. Even though it is an aging society, it is an honorable society. That is not what I can say about Europe and the US. It's not an honorable society. It's a cutthroat society when it's all said and done at the end. So I'm not worried about Japan blowing up the world market. It's going to be the sovereign debt crisis coming out of Europe and North America.
Now, with this whole scenario being played out, a lot of major investment banks basically raised their probability of recession by more than 10 percentage points. And basically, GS took it to around 25-30%. JP Morgan raised it to around 30%. We have been talking about soft landing. We have been talking about this recession that never came properly, right? Do you think we will be seeing a recession? Do you really think that it will happen? It's not going to be a soft landing. It is going to be a hard landing.
I don't think so. I mean, we have to wait for the next set of job numbers. I don't think so. Remember, this is also an election year. So the Democrats are still trying to win the election. So in order for them to try and win the election, they got to get the market back up. They can't have the unemployment rate go too far to the upside. They can't have the inflation rate go too far to the upside. The last GDP number was absolutely incredible. So I don't think we are going into a recession. I think the markets are going to recover. Now, if we're sitting here in October and it looks like the Democrats have no shot realistically, or you can't, there's a limit to how far you can cheat, and it looks like the Democrats are losing, yeah, they will try and do anything and everything to prevent Trump from winning. Another assassination, a full-out nuclear war, like whatever it takes to not have Trump elected. And something like that could potentially bring on recession. But remember, everyone loves the war economy and how the war economy will prevent the recession, right? So you're dealing with these opposite forces. Also, if the government is going to go into war, who's going to want to buy government bonds? Again, people are going to stick to risky stock assets because stocks can make money. There's plenty of sectors. Alcohol sector will do well if people are dying, smoking, vice, gambling sector, the military sector, plenty of stocks out there. AI, 3D printers, robotics, because the next war will probably have robots fighting robots. I don't know if you've seen the martial arts robots in Japan fighting people. It's really cool looking. Russia, I heard, is already testing some literally like Terminator 2 style stuff that's going to eventually go to the battlefield. Drones. How many drones are being blown up every day in Ukraine-Russia war? Probably 100 drones a day, 1,000 drones a day are, shooting each other down. That's economic activity. And I don't see a recession. I still don't see a recession. This was just a market correction. It didn't even fall 20%. The GDP number was fine. I think the next GDP number will still be fine, even if they have to make it up. So no, I still do not see a recession on the horizon, but they will lower the interest rate to help the Democrats win. They will lower the interest rate to help the stock market stabilize. They will lower the interest rate because inflation will be fudged to be low, and unemployment is already on the high side. They're going to probably fudge it to keep it steady or slightly tick it up if they need to in order to get the interest rate lowered by Powell. Powell will have his hands absolutely tied at the next meeting. He is forced to lower the rate. The question is how much, and will he be forced to lower it in an emergency cut ahead of the meeting? And he'll do that if the market makes a new low.
I agree. If the market basically goes below what it has already, I think we are looking at an emergency cut. Like there's no two ways around it. It's they started discussing it, so now it's just a matter of lose the 200-day moving average, and we are going to basically go with an emergency rate cut. Well, it sounds easy. It sounds pretty easy for us to talk about it, but it is looking really bad for certain firms, especially for firms which are making a lot of money over the last year or so. And Nvidia has basically, it's officially down 30% from its all-time high in overnight trading. In like it's losing market cap as if it's a meme coin. It's like some shit coin sitting somewhere. That's how fast Nvidia is coming down. So is Tesla. None of them is able to show strength. Now, Tone, is this market correction, like it was needed? So my question should not be whether it was needed. It was needed because people were getting too, they were like, just buy Nvidia stock, it's going to be fine. Like some people do, I'm going to buy Dogecoin, it's going to be fine. It was becoming like that. Now, do you think Nvidia is now at a good price for someone to think about investing in it again?
Nvidia literally hit my target this week. I called that
On the
top
downside.
on the downside. Yeah, Nvidia literally. I was calling Nvidia. I was gonna short Nvidia. I missed it by a day, and then I just didn't re-enter the trade. Nvidia made a high just a few days before the daily MRI top, in line with the weekly and the monthly. And my target for Nvidia was mid 90s. It was 95 to 98, and it made a low of 91. It has already bounced since that low. I would wait for the overall market to reverse, but yeah, Nvidia is back to a very good level. Tesla was calling for the perfect top in Tesla as well, and Tesla has fallen to a very good level of 182. Now that's a great level for Tesla, and it's down today. The markets were rallying really nicely this morning, but they are now back down. The one that I worry about is Microsoft. Microsoft swung down to a new low. Microsoft was the really big casualty here. Microsoft is down. Well, it's only 18%. May not look that much, but on a chart, Microsoft is at its lowest point. Oh, it's a daily chart. Okay, it's not that bad then. Never mind. Nope, Microsoft is actually not as bad as I thought. Microsoft actually has room to the downside. So I was looking at a weekly chart. It was a daily chart. And Meta is holding up fairly okay. I think the stocks are going to be fine. I really do.
Yeah, I mean, for how I'm seeing it is like I was, I basically trade Nasdaq and Nasdaq futures. So I kind of sometimes go out and look at what the small caps are doing or mid caps are doing, and I was quite surprised to see the strength that was being shown by the small caps and mid caps. Like it was a visible strength. They were not going down as much as the big players were, obviously because a lot of money is invested in the big players. A lot of money comes out. But what do you, as an investor, Tone, take out of small caps showing strength or mid caps showing strength and large caps falling? Does that show you like breadth, in terms of market breadth, we still have strength, or does it show you like, what does it tell you?
Well, it's debatable if small caps are all that strong. Remember, small caps have not broken their 2021 highs.
No, from the perspective of the Monday drop, I was looking at the charts for like specific day strength.
It shows me that domestic interest in stock market remains strong.
So that's inherently good for the markets, right?
Yeah.
That's good. That's what I was trying to like. That's what my focus was as well. Like, because when I'm thinking about Nasdaq, even like large caps, how I see them is, if there is there is a motivation to invest money in the market, the large caps will, or the indices will recover pretty quickly. If there is no willingness to enter the market in even cheaper stocks, smaller stocks, where people are not gambling, they're not taking, because these are leveraged positions at the end of the day if you are investing in a small cap. So that's how I see it, and I was like, okay, I think the market's going to recover quicker. So Tone, moving a bit away from Nasdaq and toward, we've talked about individual stocks as well. 1 second, let me grab a hold of my document as well. When we are talking about all these things, right, during this whole period, we had the Iran situation, right? We had the Hezbollah situation. Now, currently, UK is going through the worst riots it has seen in over a decade. All across UK, there are like riots happening all across the country. Today, we were basically told to go home early because of riots. Nothing happened, luckily, but we were told to go home. And all this political unrest, on top of that high interest rates, on top of that global unrest in terms of wars, how can we not see a recession, Tone? Like, I feel scared that this today was the first time I felt scared, right? How will the markets recover quickly in this kind of a scenario?
Well, again, recession where, right? Like, what's going to happen in the UK? I don't know. You guys are in serious trouble. This is what, your 8th prime minister in 3 years? Right? Am I close?
Yeah, you're close. You are close.
Okay. And so what's going to happen in the UK, I have no idea. But you're going to move your money out of there sooner than later. You're going to move yourself out of there sooner than later. The European Union and UK are dying. They are absolutely dying. And China is rising. Russia is rising. India is rising. Brazil is rising. Even though Brazil managed to elect a communist, but they're still rising. And will Europe go into a recession? Yes, potentially. And what's going to happen? People are going to take their money out of Europe and they're going to move it to other places. Okay, people that are not, brainwashed by propaganda will try to move that money into the BRICS and the East. The majority are propaganda brainwashed, and they will move their money to American companies. So yes, a recession is absolutely coming to Europe. But America is different. Especially if a capitalist like Trump gets elected.
Okay, makes sense. So you're saying, fine, in terms of markets, fine. You are saying that UK is dying. I agree. Europe is dying. I agree. But at this point of time, there is a war in the Middle East as well. And Iran has come out without any filters and said, any Arab country that tries to help Israel or tries to stop us from attacking Israel, we are going to attack them as well. On top of that, they have basically, the ultimatum was until today night. I'm not sure what's happening currently, but this war is spreading its wings in the Middle East slowly, steadily. We are seeing situation arise. Then there is unrest in Bangladesh in regards of the PM got thrown off by the military. She has flown to the UK. So basically she's in the UK now. All these political unrest, like, these are opening doors for a bigger scale war than it already is. So first of all, could you tell us a little bit about the Iran-Israel situation, if you are aware of it, and how do you see it progressing? And then about the Bangladesh situation, if you are aware about it.
So I am completely unaware of what's going on in Bangladesh. That one is, I know absolutely nothing. I cannot comment. The Israel-Iran is a lot more complicated than Russia-Ukraine or, China-Taiwan. This is a giant powder keg waiting to happen. It is Israel is trying to form a coalition with Egypt, Saudi Arabia, and Jordan to help and shoot down anything Iran tries to fire. I don't understand how that's possible. I don't see how Saudi Arabia or Egypt or even Jordan are going to be able to go into a partnership with Israel. I think there would be massive civil unrest and overthrow of their governments. Like if the king of Jordan sides with Israel, I think there'll be a different king of Jordan. I think he will be overthrown. The United States will probably have to defend the Jordanian, king's house. I think the population will rise up. Egypt is another one. Turkey has been very quiet. I don't think anyone is coming to defend Israel. The only reason why Jordan and Egypt help Israel is because the United States gives them billions of dollars to do so. The United States is slowly running out of money, especially with this three-front war. They still have to fund Ukraine, and every single government employee, from the janitor on the street all the way to Zelensky, right? Actually, I need to take a look at the Ukrainian currency and see how it's doing. I think it's on the verge of complete and utter collapse. And so the only reason why these countries are entertaining the idea of helping Israel, which is Jordan and Egypt, is because the U.S. government bribes their senior officials and the presidents and the kings, or whatever you call the leaders of these countries. If these countries go to war with Iran, their population will overthrow them. The Arabic population, in my mind, is more united than ever before, potentially in the history of the Middle East. They are more united than ever. And I don't see any of these Arabic countries taking a stance with Israel against Iran. Even Jordan came out and said, we're not going to use our airspace, which means that they have to also not let Israel use their airspace as well. Otherwise, they're declaring war on Iran. And Iran is a very powerful country, and they will have the full backing of China and Russia. And not even Saudi Arabia is going to want to fuck with that. Saudi Arabia is also not that friendly with the U.S. Saudi Arabia has been trying to broker peace deals with Iran now, and they're both in the BRICS. I think this is just hot air talk that any Muslim country is going to help or support Israel. And Iran would probably be more pissed at any Muslim country that supports Israel, even more than Israel. And it plays into the United States' hand. If the United States can create a war between Iran and any Muslim nation, especially multiple Muslim nations, the United States has succeeded in what they're trying to do. They're trying to destroy Iran by any means. And it is, this topic is super complicated, guys. And I can talk about it all day. The one question that no one can answer, and this is probably the biggest debate when it comes to the Middle East situation, is the United States controlled by Israel, or is Israel controlled by the United States? Is the United States ready to sacrifice Israel in order to cause havoc in the Middle East, and the United States doesn't care if there is no country of Israel and it just, all disappears? Or is it the other way around? Is it Israel that is really the Zionism that is really controlling the United States and controlling the United States government? And all the people like Blinken, who is all pro-Israel, being Jewish and Zionist, and who's the other one? Not Sullivan as well, but one more. Like, they're all going out there. Most of the senators. So I don't know. I don't have a good answer to this question. Who controls who? Does the U.S. control Israel, or and they just happen to be pro-Israel, or does Israel actually control the United States? I am slightly leaning to the United States will use Israel as a proxy, and the United States is in control of Israel than the other way around. The United States just happens to be full of total idiots that are unreasonably pro-Israel, and we can add Trump into that mix as well, who's super pro-Israel, though Trump may be able to change his mind, but some of the other ones never will. It's a super complicated situation. It's super hard to explain. And what will it do to the markets? I don't know. In my opinion, Iran is doing everything possible not to start a war with Israel, but they also can't allow people getting assassinated in their capital. So Iran has to do something. I bet the United States is on the phone right now with Iran, begging them not to attack. So here's what they're doing right now. And this is how I think it's happening. Iran is gonna not attack Israel, but what they will do is they are gonna attack and properly attack and destroy the US bases in Syria, because Syria is extra protected by Russia. Russia may not want to escalate in Iran, but Russia is already fully in Syria. And I think the next chess move for Iran is to properly eliminate all US held territory in Syria. And now the joint forces of Syria and Iran, both backed by Russia, will make sure all other Muslim countries stand down and not assist Israel. And I don't know what Israel's doing. They're really on a death wish here.
That's for sure. I mean, I have no idea what they are trying to achieve. I mean, well, it's their choice, but yeah, they are basically on a death wish. That was still a good explanation, Tony, even though you said a couple of times that it's very hard to explain. You were able to explain it to me, so that was good. Tone, moving on to next week's data. CPI is coming.
Oh, sorry, real quick. I do need to turn this political discussion into a market discussion. And what does a blow up in the Middle East mean for the markets? It actually means nothing. I'm sorry, guys. The markets, only when it comes to oil, right? So if Iran blocks the Malacca Straits, the price of oil could potentially rise. But again, the United States is the biggest oil producer, I believe, in the world. The United States has plenty of oil that they produce in the US. Russia and China will be fine. They are also producing oil. Who gets totally fucked in this scenario? You want to take a guess?
Europe.
Everything points to Europe being a total disaster.
Well, it's not hypothetical anymore. Trust me, I live here. I can see it's a downhill. It's downhill. It's not going to get better. They have lost their culture. They have lost mostly their economy. They have lost everything. It's visible.
Right, and again, if there is a blow up in the Middle East, guess where all the migrants are going with open arms?
Where? Europe.
Europe, right? So, like, of all the regions in the world that should be doing everything and anything to prevent a war in the Middle East, it should be Europe. But they don't even know the Middle East exists. because they're too busy, shutting down their nuclear power plants and blowing up pipelines with Russia.
No, agreed. It's quite difficult, but it is what it is. We can't really change anything politically or any other way. But yes, moving on to
And all the money as the blow up in the Middle East happens, and Europe starts to go down the toilet. Where do the Europeans go? They're going to move to America. They're going to send their money to America. They're not going to Russia. They're not going to China. It's going to be the 1800s all over again.
No, yeah, makes sense. Yeah, cool. Moving on to CPI tone. Next week we have CPI. You have already stated your expectations in a way, but officially, what are you expecting the CPI numbers to look like? You're muted, Tone.
Let me take a look at what the expectation is.
I can't see the forecast on Forex Expert for some reason. It's not showing forecasted. It's literally showing previous. Previous was 2% year on year. Core was 3.5%. I don't see expectations.
Are you sure it's this week and not next week? It's next week, right? Oh, next week. Oh, I need to look that up. CPI expectation. Forecast is 3.1.
Okay.
Wait, that might have been the last forecast. They don't have a forecast yet. They're waiting because probably there is no forecast because of this ridiculous market. Yeah. The previous was 3. The previous forecast was 3.1. Look, things are expensive. I mean, I fly, I travel. I just booked rental cars and flights for the next few weeks. Surprisingly, rental cars are not that bad. And flights are hit and miss. Honestly, I think inflation is going to come in at 3 or 2.9. They're going to make sure Powell lowers the rate. And don't forget, I think there is one more CPI before the Fed call, right?
Yes, there would be one more, yes.
There will be one more. So I think this one is going to come in around 3, plus or minus 0.1. And then we'll talk about the next one in a week.
Yeah, so the next one is on 11th of September. The FOMC meeting is on 18th of September. So yeah, we'll have one more CPI come in before the FOMC meeting, unless they basically decide that they need an emergency cut, which I really hope they don't. Because that, I don't do agree with this point that if they go for an emergency cut, that basically shows the market that something is really, really broken, like officially.
If they go for an emergency cut, it would prove that they don't know what they're doing and they should have lowered the cut last meeting, right? Yeah. It also shows that the only thing they actually care about is the stock market. So I don't think there will be an emergency cut unless the stock market has another Black Monday.
Makes sense. Makes sense. Well, Tone, that was all the topics from me today. Anything you want to add to before we end our discussion?
No, I mean, that's pretty much it. If anyone has a question, I mean, maybe people posted some questions in reply to the space. Or come up and ask a question.
Guys, if anyone has a real question, please request to speak. If you don't, if you just want to basically come up and be here, don't. Any questions, guys? Anything from the listeners? I don't see anything in the comments.
I don't know. So I don't know anything about Bangladesh, but I know this. If the president of Bangladesh or prime minister of Bangladesh was going to flee Bangladesh to the UK or to the US or to Europe, that is a prime minister that should have never been elected. And either that prime minister was elected because there was propaganda or cheating going on, or because the population is thoroughly brainwashed. No one that has the opportunity to flee to Europe or the US should ever be elected east of Turkey.
Yeah, I think the problem with Bangladesh is basically it was a initially a very calm student protest, which turned violent because of how the military reacted, and that basically resulted in all this scenario to be created. It literally, it was quick, it was swift, and it was quick. So yeah, a lot of things happened. One of our listeners has basically corrected me in saying that the prime minister is currently in India and is still waiting to travel to UK, and it basically
No. I saw that comment, right? But the whole idea is, why in the world is a UK affiliated prime minister in charge of Bangladesh?
sorry.
The whole question is, why is a UK affiliated prime minister in charge of Bangladesh? That's the problem.
It's not affiliated. Mostly what happens in at least Pakistan and Bangladesh is anytime the army throws a prime minister or a president out, right, they basically run to UK and seek asylum. Because obviously these people are corrupt, right? Like most of them have made a lot of money with corruption, and they basically move their money out of India, out of the country, into and invest in properties over here or other things over here. So they basically, it's like their retirement plan.
Correct.
That's what
Well,
they do.
this is what I'm saying, right? These countries like Bangladesh need to elect people that are not affiliated with the UK and the US. This is why that country still has problems.
Yeah, agreed.
Right? Because the US and the UK and Europe have zero interest in prosperity for Bangladesh.
Agreed. Why would they want it? Why would they want East to get stronger? A totally valid point.
Right. There was if anyone follows Brian Bolitik's New Atlas YouTube channel, where he constantly talks about the comparison between Thailand and the Philippines. The Philippines has twice as many people. It's a way more English-speaking population, and yet the GDP of Thailand is twice that of the Philippines, because the Philippines is constantly electing pro-American leaders that all they're doing is starting wars with China and kicking out Chinese investment, where Thailand, while as much as the United States keeps trying to do the same thing with Thailand, Thailand continues to work with China, and that's why Thailand has high-speed rail and a significantly stronger economy, because they continue to work in their own interest with major economic powers that are looking to help the country improve, like China, versus a place like the Philippines, which continues to hire pro-American leaders, and those leaders are working with the American government, and all American government cares about is that the Philippines goes to war with China. They have zero interest in prosperity for the Philippines. And hopefully people in Bangladesh will start voting people in that care about the interest of the people of Bangladesh and not the interest of the West.
Makes sense. Tone, we have a question coming in from Never Give Up. Do we see another bottom for BTC at around 49K, or what's your expectation? He just wants an area to bid. You're muted, Tone.
Sure. So the tone-based rule of trading is I do not believe in double bottoms. That means the last place I would ever buy Bitcoin in the next 3 months is at $49,000. That is literally the one place I am not setting a limit order to buy Bitcoin. Where would I set a limit order to buy Bitcoin? Well, I'm okay buying it now at anything above 53,000. Maybe even above 52,000. Let's split the middle. Anything above 52.5 to me is a buying opportunity. Anything below 52.5 is not a buying opportunity, and I would wait for sub 45,000. So the one area where I am not buying is 45 to 52 and a half.
Agreed. And on top of that, like I'll basically give my 2 cents as well. So when we are trading trend, we basically want to see some sort of reaction. Like if you want to put a bid in, you want to see Bitcoin create some sort of a higher low or some sort of a higher high at this point of time. Like as a trend trader, at this point of time, BTC is in a secondary consolidation or secondary downtrend, as I would call it. For me, it's a secondary downtrend. We are creating lower highs, lower lows, one after another. You should like if you really want to trade the trend, wait for the first higher high to be put in, then the higher low is your buying point. Right now you're catching a falling knife. You don't know what the bottom's gonna be. So yeah, wait for the trend to tell you that I want to reverse. Once it has told you, feel free to buy when you feel is the best time. Tone, I hope I put it in the right way. That's it.
Yeah.
That's it for today, Tone. Pedro is here. Pedro wanted to ask a question, I guess. Let me bring him up. Hey, Pedro. Pedro, you there?
I see him.
I see him, but he is muted. So I'll give him a minute. Till then, there's another question. Tone, somebody's asking, today in your video, you said you would be exiting his trade if BTC goes below 55K. Can you please, can you tell what the status of that trade is, Tone?
I'm still long in the trade. I'm not panicking yet, mostly because we're still dealing with an MRI buy candle on the daily. So I did not close the trade. Right now we're sitting at 55K. I'm gonna give this till end of week. I might lower that to 52 and a half before I pull the trigger. I'm already down, so I might as well just wait for that rebound. Like I said in the beginning of the space, we rallied from 49,000 to 57. That's an $8,000 move. I'm okay with it, pulling back 50% off the move. So that's a $4,000 drop off the more recent high, and a $4,000 drop would take us down to 53 and a half. So that's when I would really be concerned at 53 and a half going into week closing or even tomorrow. So I'm still, optimistic here that the low is in.
Lovely. Pedro.
Hi guys. Hi, you hear me?
Yeah.
Okay, it's a pleasure to talk with you guys. I have a question. I sent a link in the chat about crypto for Harris. I don't know if you see that. It's about the Democrats apparently want to go for the crypto voters. What's your opinion, Tom, about the possible reaction of the markets with this news? Thank you.
Man, the Democrats have no bounds. They are doing anything and everything to get elected. The one thing I will just warn people about Democrats is Democrats are Marxists. Okay, they do not care what they say. They do not stick to their word. Not that the Republicans are much better, but they're a little bit better. The Democrats will take crypto donations, and then after they get elected, they can send you to prison for sending them the crypto donation. That is what I think about the Democrats. And anyone that votes for them is basically a communist. Now, again, the Republicans in the United States are not much better. They're a little bit better, but we're not getting out of this one. So I ignore things like this because all politicians are pure liars, and they will do the opposite. The Democrats are just a little bit worse, not by much, but a little bit worse than the Republicans.
Okay, like any other country. Okay, thank you guys. Thank you very much.
Tone, last question that we can take is basically coming in regards of it's not a question. It's I really wanted to answer this because there will be a lot of new listeners and they should know. So somebody is asking, we guys are talking about a lot of topic. They're like, what are our credentials? So Tone, what are your credentials? How long have you been in the markets? What was your past? Can you tell it to people who are new to new as our listeners and new to your account as well?
Man, I'm getting ready to retire. I've been in the markets. What year is this? 2024. 20 years now. So I first started to learn how to trade around. Well, I graduated. Let me not date myself, but I started working on Wall Street in late 2006. But I was already trading before that. It's just that I ran out of money shorting the real estate market in 2006 because I started shorting the real estate market in 2000, like late 2005. And by late 2006, I ran out of money. So I had to go and get a job, which ironically was at Bear Stearns, when the company went bust a year later because of the real estate market. And I worked on Wall Street from late 2006 to 2015, so just under 10 years, and mostly on the quant desk building risk models for traders. And then I was also trading on the side a little bit, as much as I could. I wasn't allowed to trade for like 5 years because of my job role. And then when I switched jobs in my last 5 years, I was able to trade again. And then I quit in order to be a trader. But then this Bitcoin thing got in the way, and public speaking got in the way. And so I've been mostly doing public speaking and educating about Bitcoin for the last 10 years, and less trading. And we'll see what happens next year. Now we're running conferences like the Financial Summit and other events.
And about me, I'm just the host. I know nothing. Just
Nah, I wouldn't go that far, but I know you need your anonymity for certain reasons.
if you come, Sana, if you come to the Financial Summit, we'll have a chat. But yes, our speakers, they know a lot. That's why they are the speakers. That's why we ask for their opinions, because they have been talking about the rate hikes, the rate cuts. They have been talking about how the markets are going to be responding. Tone called the top at the very moment of the top, and I was there. Tone called the bottom in Bitcoin when I was with him, sitting in Dubai. He basically told me this is what I expect, and that is what has happened. So yes, you don't take his word as a holy grail, but take his word and then research about it, learn about it, and think about it. You will learn a lot of new things. Well, that's it, Tone. Thank you so much for your time, and looking forward to speaking with you on the CPI day.
Perfect.
Take care, guys. Have a lovely week ahead, guys. Bye bye.